All right, it's going to be very painless and easy, unlike being in crypto, which I think is kind of the opposite most of the time. Anyways, we're going to start with you, and then we're going to work down. Introduce yourself, company you work for, what you do there, and then we'll kick it back to me, and we'll get into it.
Sounds great. Thanks, Eric. So hi, everyone. I'm Shawn. I'm the Vice President of Asia Pacific for Hypernative. So in a short 30 seconds, what Hypernative does is that we are the Web3 security solution that enables protocols, chains, institutions to actually detect risks, security hacks, exploits on a real-time basis, and then actually enable a lot of these teams to actually prevent those hacks happening before it actually happened. So we have saved more than $2 billion of potential losses to hacks, and we service more than 270 clients, the likes of Kraken, Circle, the largest asset managers like Galaxy, Amber, Fasanara, so on and so forth, right? So we work with protocols like Unichain, Uniswap, and also most of the major L1s and L2s like Ethereum Foundation, Solana Foundation, Aptos. So our solutions are providing a lot of risk insights to all these different crypto native institutions, and also a lot of traditional institutions like Fidelity that's coming into blockchain.
My name is Andre. I'm head of research at GMCI, and GMCI is a crypto index provider. So you can think of us like S&P. We create different indices, can be sector index, can be a broad market index, can be an ecosystem index, and then we work together with partners to make those indices also investable for the public.
Hey, Rafik from Aya. So I'm VP of growth at Aya, so essentially taking care of mostly marketing, BD, and product feedback. Aya is a mobile super app, essentially with a wallet integrated into it, and also a yield aggregator, and the ability to do option and perp trading, with the particularity that we have an LLM built into the mobile app that allows you to essentially interact with the AI through natural language in order to perform transactions on-chain, but also with Web2 companies. But more on that, I guess, during the panel.
Yeah, that's what we're getting into. And I'm the CEO and founder of New Friendship Tech. Acronym is NFT. The idea is technology creating new friendships in a world where social media used to bring us closer together, but now pushes us further apart, with the only way of beating the algorithm being in-person experiences like this. So I produce events all over the world adjacent to the top conferences that I'm hosting, and make everything free entry, free drinks, free food from start to finish, with at least 2 women per stage per panel, equally inclusive music programming at the end. And these events actually compensate you for attendance and participation. We redistribute wealth and democratize information. So, yeah, that's a lot. 60% Web 2, 40% Web 3. So, all that said, I want to know, coming into this space, what do you feel was the biggest hurdle or form of obstruction or adversity for you guys? You're working deep in your companies. AI obviously is a much newer thing, even though Google and so on and so forth have used it for a long time, but now we're actually recognizing it. But to go from the Web 2 end to the Web 3 end, and going from literally the institutional side or the traditional finance side into DeFi and the surrounding, what was the biggest wall or hurdle or form of obstruction that you faced getting to the other side of the fence? And this can go to any of you first.
Yeah, I'll go first. I think the promises are beautiful, right? When you look at DeFi and Web3 in general, what it promises, the centralized world, where with equal opportunity for everyone. I think it's a beautiful idea, especially when you compare it to traditional finance, where for example, just to take one example, you have to be an accredited investor in order to access certain financial assets, which is it's supposed not to be the case in DeFi, but then there's still a very high barrier to entry, because if you don't understand how to use the tech, then it gets very difficult to actually use it, and be able to take advantage of it. So I think it's just the promise is up there, but the products are still down here.
Do you think that's a lie, by the way? And you guys can add to this at any point, but I make people that I educate read the Bitcoin white paper, and I educate them on self-sovereignty, privacy, ownership, identity, and the future of things, where ownership is key, you know? Not your keys, not your wallet is what we used to say. If your money's in a bank, it's not your money, right? But do you think that the decentralized pie in the sky part of it is a reality, or have we kind of strayed away from that?
I think it depends on the part you're looking at. If you look at governance features, they can seem quite decentralized, but in fact are not. So that would be an aspect where I would be highly skeptical whether it's fully decentralized if you have one token, one vote, or one wallet, one vote. So I think that would be an aspect that is probably not decentralized for most cryptocurrencies. But on the other hand, we do have possibilities to self-custody, and also the access has improved quite a lot. So you have actually a lot of remittance services that use crypto at least as like a medium of transport, maybe not for the last mile or like the last conversion, because usually you still need fiat currencies for that. But we have seen a lot of non-custodial services that actually bank some of the world's unbanked people. So it's a mixed picture, and the industry has grown so much that you really need to focus on specific areas to really check whether the promise or the vision that originated is actually fulfilled or still pending.
I like that. It's like an alternative vehicle, right? It's like you can do things this way, or you can do things that way, or you can mix them both. But at the end of the day, a trustless system, ideally, you know, zero knowledge systems, ideally, we don't have to think too much, and we don't have to do too much or give away too much in order to get a lot. And I think that is kind of one of the big value props. And my question about the biggest form of adversity or obstruction or hurdle from you two, which...
Yeah, happy to add on that point. So I faced off, my background has been spent around a decade in TradFi and capital markets. So I have put on myself a mission to kind of onboard a lot of these capital markets, all focuses into the Web3 rail. But I think that whole journey in terms of transitioning, there are a lot of hurdles, right? Definitely we want to work with regulators. We want to put in place specific guardrails, but it's also coming back to certain questions like, sovereignty, right? We talked about decentralization. I think decentralization is a good concept, right? For any maxis out there, if you look through a lot of protocols you use today, they're not decentralized at all, unfortunately, to break the bubble there, right? So I think at the tech level, I think we can be as decentralized as possible, but from a governance standpoint, unfortunately, a lot of the way it's set up is not decentralized enough. But what we wanted to, when I speak to a lot of institutions, the idea here is that how can we scale at a much faster pace, right? Right now, today, a lot of the institutions, when they are reaching out to the underserved region, they need to spend a lot in terms of acquiring customers and setting up very piecemeal infrastructure. But the idea of onboarding them using public permissionless blockchains that can scale at a much faster pace actually presents a great opportunity, right? That's why there's that boom around stablecoin payments rails. Potential in Africa, in Latam, we have really seen that booming in those areas. But especially in this part of the world where a lot of this banking rails and payment rails are still rather well established, right? The push factor is not that high, to be frank, right? I think a lot of things are working well. In different parts of the world, like in Taiwan, you have Line Pay. More or less, you're more or less kind of well served, right? Then it comes down to the questions that do you want to be owning your own assets in your own self-custodial wallet, right? So there's the concern about institutional risk, where the institutions that are holding your money. But I think there will be a tension till where, between public institutions and private institutions where they have their own goals and objectives versus how the industry is trying to disrupt them. Unfortunately, we also seen a lot of DeFi protocols kind of seeing that narrative towards institution, especially of the Genius and Clarity Act, where they're taking a lot of approaches to centralize a lot of their operations. So I think we need to see where is the fine line to kind of set up the operations accordingly.
Yeah, I mean, I personally have trust issues with the idea of tokenomics being created by people that barely understand how to solve inflation and socioeconomic issues. But that's just me, you know. And I also understand that my mom has me handle and manage her crypto portfolio, and she's 74 and doesn't understand much of it. But when she's like, "Oh, Eric, you work at Bitcoin," I'm like, what? But at the end of the day, my dad, on the other hand, he wants to own and retain and move things around and this, that, and the other. So I do think one big form of problem that we face is the lack of accessibility and inclusion to the space. It's not like when you're born, you get a social security number or some type of thing that's tied to a wallet that you have for the rest of your life, and ideally don't lose your seed phrase or a private key or whatever. But yeah, accessibility for sure.
I can add to that. So a couple of years ago when I joined the space, we were basically missing, I don't want to say everything, but we are missing a lot of parts at different parts of the value chain, let's say. When we wanted to interact with TradFi, it was basically a lack of education, so they didn't know what we were doing, how we were doing it. The reputation was bad, also tied to the lack of education, lack of knowledge about the sector. You didn't really have any legislation, and given that we have so many contact points with TradFi, thinking about wallets, about custodians, about oracles, there are so many different stablecoins and so many different touch points where we as an industry also matured quite a bit. If you compare the just the standards we had and how all those parties have become TradFi compliant, at least, not fully copying TradFi, but playing or meeting them where they are. Because let's be real, like no bank is going to decentralize their governance, and JP Morgan is not going to become crypto native. But that's why we have to meet them where they are. And if you look at Chainlink, if you look at Pyth, if you look at BitGo and Zodia Custody, all those partners, they hired a lot from TradFi, but they also made sure that the regulations that we now have were influenced in a certain way, so that you can actually have retain some of the crypto native aspects but still complying with TradFi, because that's the only way to onboard them. If you have or want to have institutional clients, you cannot just come with your DeFi product, be an anon, just like a random Twitter profile. They're not going to talk to you. And if you have crypto native people, they might not care so much about certificates and ISO standards and all that stuff. But for us as an index provider, we are based in Europe, so we have to comply with European laws. For us, it's the benchmark regulation, the BMR. And we've talked to many bigger exchanges, to TradFi exchanges. We've talked to asset managers. And if you don't have that license, you're not going to get a foot in the door. It's absolutely a no-brainer to have it. And for us, it also makes sense because to get those licenses or to be compliant is not that easy. So once you've done it, you actually have some kind of competitive advantage over people who want to remain anonymous. And that's their good right, and they should continue doing so if that's what they prefer. But then they won't be able to interact with TradFi a lot because they have compliance departments, they have different risk preferences, and that's what you have to accept in the end.
Yeah, I mean, it's a business, right? I remember what seems like many eons ago when I was transferring my crypto into my JP Morgan Chase Manhattan bank account, and that account got closed because it was crypto, right? And then I remember opening a new account and getting that one closed. And then I created a Bank of America, and that one got closed. And now I see that Jamie Dimon and JP Morgan Chase are in bed with Coinbase, right? And Base, I used to really appreciate and value the ease of access, the UI, the UX, I liked it a lot. And I moderated panels for them. I hosted for them as well in Miami and a few other places. So I really admired what they were doing. And then once I started looking deeper and pulling the curtains back and seeing the transaction fees and everything else that was associated with their business model, I was like, I can't do this anymore, And so I kind of lost hope and faith, and that sucks to say because we are at we're at the future of finance here, right? This is super important. But I don't think that there should be a monopoly over the business that is finance. And I think that's kind of where we're losing the plot and the narrative shifted. So speaking of narrative shifts and changes, right, I'm going to shoot over to you and then we can come back this way. But all of your businesses provide solutions to problems in different ways. What is that solution, that niche that you're going after, that you're solving, and why is it important? And I want to start with you.
Yeah, I think the key, at least for us, right, with Aya is really to be able to take advantage of Web3, but still with the simplicity of Web2. I think most Web3, be it like mobile apps or dApps, etc., is way too complicated, right, for most users, for most people. So I mean, there's no way we get to we get everyone on board with such products. So I think it's just like I don't know, Instagram or any other apps that you have on your phone, right, where you don't need to understand how TCP/IP or HTTP works or how internet works for you to be able to use that product. So it's the same concept, just applied to Web3, where you have access to a wallet. Things are very simple, and even if you're not sure, you can actually chat with the AI to get some additional explanation. But really, like, go to the core, keep things simple without having the users like a need to understand the tech behind. Like, I think there are very great opportunities with yield today, thanks to DeFi. But if you're gonna tell users, well, you need to first, onboard, get your funds through a credit card, buy some ETH that you have to swap to USDT, and then bridge it to this other chain so that you can, go into a pool where you have to stake. And it's not gonna happen. Exactly, yeah. But if you have like an app that abstracts the tech, essentially, where it's just like, well, send money through a bank wire or a credit card, and then just, put it in that vault. Well, then I think this is where we can have a key.
I would say, in summary, simplification for participation in crypto. Yeah.
And I still sometimes see it. Like, we have solutions, for example, for gas cost abstraction, right? So, and then a couple of weeks ago, I wanted to bridge from one L2 to another, and I just bridged USDC, and then I was like, okay, I don't have ETH to pay for the gas fee, so I need to bridge that again, and it's like such a headache, and that shouldn't be the case. The user should just pay the gas fee with whatever token they have, and that was just like came to mind when you talk about it. GMCI for us, part of our team actually comes from TradFi. I don't, but the rest of the team, and we looked at why indices work in TradFi, and the way they work is they give you exposure to the broader market, if we are talking about the NASDAQ or the S&P 500, at a lower volatility. And for many people, the main part is also that you don't have to watch your positions that much. You don't have to follow the news about what is Tesla doing, or what is Microsoft CEO doing, or what is happening in that space. You can just passively get exposure to a market that is over time likely going to go up. And most people just don't want to have the hassle. And I think the same applies to crypto. So it would be actually quite useful to just follow the overall crypto market instead of just trying to actively manage positions and trying to time the market, trying to pick your winners. It's just by statistics, it's not going to be successful. Like, most active traders don't manage to outperform the S&P 500, especially not over a longer time frame. So you just have to be honest and ask yourself, like, what's your edge when you're actively trading? And I don't have an edge. I'm honest about it. I don't have any insider information. I don't have any insights or trading tools or whatever. I'm just honest about it, and I would like to get passive exposure to certain maybe narratives. But even then, I wouldn't want to pick like a low cap DeFi protocol. I would rather have the DeFi index and then invest in those products. So that's what we are trying to solve, to make it easier for people to benefit from the upside without getting shaken out, without getting liquidated, just keeping it simple, keeping it low effort. And if you want to have your side bets or do some meme coin investing with a smaller part of your portfolio, go ahead, that's fine. But I think the more sensible approach is to have a decent stack in a let's say a top 30 index or something like this.
All right, so no alpha on the next runner?
Absolutely not. No.
All right, got it. Shawn.
Yeah. So how does Hypernative kind of help institutions is that, so from the onset, the team was built 3 years ago where we studied a lot of the current solutions, where when institutions are coming onto blockchain, one of the biggest concerns is that there's so much exploiters, right? You're facing off state actors, the likes of Lazarus Group that is linked to North Korea. Definitely there are a lot of bad actors in different parts of the world. And you also have a lot of hackers out there living within the blockchain itself, right, within the dark space. So we saw that there was already a lot of good solutions around the MPC side, which is the key management side, and the wallet infrastructure side. But there wasn't really good solutions around the equivalent of the Cisco's, the Cloudflares of the world, where it's securing a lot of the Web2 infrastructure. And that's where we come in as the Web3 layer for security, right? So we have built a very wide network of 70 plus chains that's integrated with us, where we are monitoring at every block level what is happening on all the smart contracts at a metadata and also reading through the bytecode. So that will then be fed into our machine learning and AI models to understand the context of what potential hackers and exploits are trying to deploy at the smart contract level, and then thereafter translate that to risk insights to institutions that are using us to make real-time decisions, right? We can either build what we call as automated responses that will then be triggered as like a circuit breaker to pause protocols, pause certain withdrawals. Like for example, just 2 days ago when Bunny Finance was impacted, we were able to kind of go to the protocol itself and tell them that you are going to be hacked, and they were able to kind of exercise certain control over that. So those are some of the things that we do with the ecosystem and also with institutions where they have capital that's deployed on-chain.
Very cool. Keeping people safe, protecting their money. That's foresight is important. Also with you, with the indexing and having a magnifying glass over the entire space and what's moving and shaking is important. And then obviously with AI tools, you'll be able to benefit from that as well in the future of things. So speaking of the future of things, as we come from the institutional layer, right? Why are we here? Why are we still in this space? There's so many fraudulent bad actors and performative people and exploits, and every other day we're hearing about a founder that just had his unlock and exit, and he's telling a story, or she's, wait, never mind. But, you know, it's a pretty volatile space. It's kind of gross in a lot of ways. It really makes you question, you know, character, ethics, integrity, and more. And this is a space where, like, I pride myself on the opportunity of being able to reinforce, you know, traditional systems in a way that's never been done before. But as much of the negativity and things that happen, it makes it very difficult for me to convince people to come over here and to participate and to set up a wallet and to try this and try that. So what keeps you guys here? You're all here for a reason. What keeps you in the space?
Yeah, I'll just quickly start because I think we're running out of time. So essentially, if you see today, like when our team kind of can detect hacks and kind of stop a lot of the exploits and even lock down hackers' funds, it kind of gives a lot of joy that we kind of can secure this space at a much more tighter level, right? And make sure that the bad actors are not doing what they want to do. Right, but I think in any sector there will always be bad actors, right? Even in the most regulated scene, there's money laundering that's happening. Actually, that happens a lot more on the traditional rails, right? So I think at the end of the day, everyone is here to be a positive force for good, right? So I think, especially for blockchain side, I really see the promise of potential of the different use cases around there because I work with a lot of the institutions. I think there's just a lot of things that we have yet to unlock.
Yeah, I completely agree. It's easy to be pessimistic or cynical about it, but as you said, we have bad actors everywhere, and that shouldn't stop us from keeping the innovation going and trying to instill those values that we, or maybe many people still in crypto have, and just trying to push them into current regulations, because the idea of being completely separated from TradFi and setting up a new financial system, I think that was quite naive because we have to operate within the bounds of TradFi because that's where most people actually access the financial system. But still, we should continue building an alternative, but also force the integration with our values. Because if you look at the builds that were introduced, they don't outlaw any non-custodial wallets or assets. So that is, for me, like that's really important. You're allowed to custody the assets yourself. And without that technology and that environment that we had over the past 10, 15, let's say 20 years, if you include also cryptography before Bitcoin, that's super important. I think that's a force for good. And we might not have seen the best applications of crypto yet. I think the use cases are still being imagined as we go. I have no idea how AI is going to influence it, to be honest. I think it can be your best protector when it comes to code and analyzing and protection. I think many exchanges, I think we heard it yesterday in a panel, many exchanges use it already to combat AML and enforce KYC and just watch out for any potentially dangerous transactions. So that can be a force for good. It can be an attack vector. You have deep fakes, you have everything else, but that's not related or like focused on crypto exclusively. That's a problem that we will face generally. So I'm still excited about the future. I think it depends on where you focus your attention on. There's still a lot of cool projects building. ZK technology is super promising in my opinion. And as long as we don't forget the reason we went into Web3 and crypto, we can still work on integrating that vision or that ethos in current procedures.
I'll be short. No, I think as Shawn and Andre already pointed out, there's malicious actors in every industry, and ours is not different. But main reason why I'm still here is I think we're quite lucky to be in Web3 or blockchain X AI because it's pretty much discovery mode every day, and we have a really good chance to discover new things, to build new things, and to really disrupt other industries, which might not be the case in older industries.
Yeah, I think next year, if Tiffany or someone out there wants to come up with a new title for this panel, it should be called Not All Heroes Wear Capes. And these are the good guys. I appreciate you. We're going to get on to the next panel. But yeah, if you can give a round of applause for our speakers.
Thank you.
Thank you
Guys very much.